Hello and welcome to NRCC Exploring Doing Business in the Netherlands. I am Teodora Tompea and we are addressing to the audience to the Romanian companies interested in expanding in the Netherlands today. We will talk about the main differences between Romania and the Netherlands in terms of taxes and financing, and Edwin Warmerdam, partner, head of tax and Mazars, Romania. Thank you so much for being here.
Pleasure. Thank you.
Before talking about taxes and financing, please explain a little bit more about the company and about you and about the history for the audience. Maybe they don't know you so well.
Okay, so I arrived in Romania for the first time in 1998. So I'm celebrating my 26th year soon. So by now I always say I'm 50% Dutch and 50% Romanian, and then people ask what is the good and the bad part. I say, well, they're very harmonious, I think, together. Before I came to Romania, I worked in the Netherlands for one of the big four firms. I also worked in the first years for a big four firm in my field. Then I did a couple of years of real estate development. I enjoyed the beginning. I didn't enjoy the end because the crisis came. And then I decided 10 years ago to go back to my original profession, to be a tax consultant, and I joined the firm Mazars. Mazars is already in Romania since 1995. I joined 10 years ago. To give you the size of the magnitude of our business, we are with approximately 350 and 370 employees. We have different lines of business. So what we do is firstly audit, then we have advisory, then we have accounting and payroll services, and of course the fourth element is tax. If we split the revenue a little bit, I mean, we are approaching the revenue for 15 million euros into Romania, then around 60% of what we do is what we call is Channel 2, which is then advisory, accounting and payroll, and tax services.
Okay, now you said about taxes and financing, and here in Romania is very chaotic. How it's in Netherlands?
I would like to say that in the Netherlands...
It's not the same.
No, I would like to say that it would have been different, yeah. But in the last period of time, we have also seen in the Netherlands a lot of ad hoc and last-minute changes.
You've experienced the same.
Not as extreme as I think in Romania. I think is that when I look at the legislation in the Netherlands when I left 26 years ago, it was much easier to catch up on the changes. When I look at the changes in the fiscal legislation over time in Romania, then each 3 years, something totally different is being introduced.
No predictability.
Yeah. So when it is about stability of legislation, then I think is that the predictability in the Netherlands is a bit higher. We will find a significant tax change to be a change in rates. Not like in Romania, when we see, comparing to last year and this year, that suddenly we need to deal with revenue taxation. We see that the micro company regime is adjusting. So in Romania, the changes are a bit more frequently.
But please tell me a little bit more the differences in macroeconomic fiscal budget and global European tax trends now.
Yeah, so I think first we need to look at GDP, fiscalization, and these type of percentages. So if we would look at the GDP in Romania, then it's around 350 million euros. In the Netherlands, we are approaching 1.1 trillion. So you see that the economy in the Netherlands, is measured in GDP, is 3 times as large. However, if we would look at the population, for example, the Netherlands has a growing population. It is reaching 18 million, compared to Romania, which is 19 million euros. If we then look at the fiscalization of the economy, so how much taxes of this GDP is being paid, then Romania is approximately at 28%, and the Netherlands is approximately at 40%. So that gives you a good indication of what is the buying power of the government and what type of services it can render towards the population. Then there are some more difficult topics. And the difficult topics is that when we look at the VAT gap, for example, that is the VAT which is charged but not paid, then Romania is very high at European standard. It is almost 30 to 35%. that is 7.5 billion euros in VAT, which is on a yearly basis not being paid. If we compare that with the Dutch rate, then the Dutch rate, they say it's between 2.8 or 3%. So next to the low percentage of fiscalization, you see in Romania that that low percentage and the collection is also maybe caused by the VAT not being collected. Then there is another element which is important from a macroeconomic perspective to look at: what is the informal economy? The informal economy in the Netherlands is around 10%. So that means on a GDP of 1.1 trillion, I round it a little bit, that is 100 million euros. However, in Romania, it is between 30 to 35%. And maybe the fun fact is, you see, the informal economy in the size in both countries is as significant. Yeah? But of course, that when you look at an economic in the Netherlands, which is 3 times as big, that is a significant difference. Now, why do I think this basis is very important? Because if you go into the details of the different taxes which is being levied and the services which are being rendered, I think this fiscalization of the economy is extremely important. This is macroeconomics. Now the trends into fiscalization, what we see. In the past, it was a lot of compliance and documents which needed to be filed. But you see also in Romania that this trend between e-invoicing, e-factura, SAFTI, there is more and more documentation which is automatically being generated. So this digitalization also of the tax authorities. Romania is, I think, at this stage on a very good path to reduce this informal economy, to reduce this VAT gap. These type of electronic filings are extremely important to get it more into line with what other Western European countries are charging. Next to these e-trends, of course, what we also see that legislation, European trends, when we are talking, for example, about SAFTI, that is a European trend. When we look at e-invoicing, European trend. But we also see, for example, that currently Pillar 2 is being implemented into Europe, which basically means that we want to have a minimum tax in Europe, and that minimum effective tax rate is 15%. So you also see next to e-invoicing, digitalization, the standardization into Europe. We sometimes call it a European corporate income tax rate, but Pillar 2 is an alternative and a forefront there. And I think that gives you a bit of the trends of what we see in the fiscal area, which is going on in Europe, and how Romania is reacting towards it.
A lot of people invest in Romania via the Netherlands. Why is this way?
Yes, so when I arrived for the first time in Romania, there was a new double tax treaty concluded between Romania and the Netherlands. And the double tax treaty meant 0% withholding tax on most of the payments from Romania towards the Netherlands. So we always say, as long as tax is not a disadvantage towards an investment, then this becomes interesting. But it was not only for tax reasons. There was also a very good investment treaty between the Netherlands and Romania. So investors, when they were investing into Romania, they felt protected based upon that investment treaty. Next to that, what you also see that companies need to decide in which country do I put my European or my Eastern European headquarters. And I think the Netherlands there has a very good infrastructure, a good banking infrastructure, a good legal infrastructure when disputes with shareholders would arise. Yeah? So I see that it has related to legal, financial issues, a good banking instrument, but tax was not a disadvantage.
What are the taxes that individual should pay in the Netherlands, a Romanian individual should pay in the Netherlands?
Yeah, I think this is different elements. Also in the Netherlands, we, for example, seen that when a foreign individual comes towards the Netherlands, and that is an individual with knowledge and scarcity on the Dutch market.
Yes.
We have a certain incentive for this, which we call the 30% ruling. So an individual with knowledge could get 30% of his income tax exempt. Although last year, this was also for us in the Netherlands a sudden change, the 30% ruling has further been limited. Mm-hmm. The amount of money has been capped, around 230,000 euros, and the period has been limited towards 60 months. And when you look at the rates, then you first need to see if the individual would be paying social security contributions or not. The Dutch social security contributions are not that high, interestingly enough, as in Romania.
Really?
Dutch social security contributions are capped. It is around 27%, if I recollect that correctly. But it is capped at an amount of money of approximately 38,000 euros. So that makes the maximum amount in social security contributions which an individual can pay around 10,500. Imagine you would have 100,000 euros as income. Then in Romania you will pay 25% pension, 10%. So that's 35,000 compared to the maximum 10,000. So it is important to decide in which country is the individual insured to establish what is the social security contributions. But now the counter on this. In Romania we have flat income tax rate, only 10. But in the Netherlands, there is progressive income tax. Mm-hmm. So although the social security contributions are capped, it is being replaced by a much higher individual income tax rate. And if I need to look at the rates again, but I thought the standard rate was around, now I need to look.
No problem.
Yeah, the standard rate is around 9% on the first 38,000 euros. Then it becomes 37 until 75,000, and everything which is above is at 49.5. So if you compare that with what are the rates in Romania, it is 10 plus 10 plus 25, yes. 45%. So you see the top rate is very similar, but it is differently being built up like.
When having investment income in the Netherlands, there is a box system. How does this different than what exists here in Romania, for example?
Yeah. When I left the Netherlands, we didn't have a box system. So this is something which I needed to adjust to. Box system means that if you have salary income, that is box number 1. Salary income is taxed at the rates which I just mentioned. Then we have a box 2 and a box 3. Box 3 is for investment income. That is where the Netherlands is going through a period of significant change. We had in the past fictions, so we said, when you have money into the bank account, we're not going to look at your real amount of money which you receive, but we have a fiction on income. A very simplistic way how to approach yes. that. But the rates, when you look upon in Romania, when you have investment income, again, it is the flat tax rate of 10%. So Romania has a significant difference between how salary income is being taxed and how investment income is being taxed. However, the Dutch rates are going into the direction of 30%. What is going to be a significant change, which the Netherlands will go through, is that in Romania you only tax income when you cash it and you have it in your pocket. You could postpone. In the Netherlands, the trend is that we think that the value increase of your portfolio, although you haven't realized it yet, should be subject to taxation. So you see that the trend in Romania is we look at cash, but in the Netherlands, for individuals, you would be more looking towards the accrual system.
And this means horizontal monitoring?
No.
This is not?
No.
This is something different. What does this mean?
Horizontal monitoring. So horizontal monitoring means that what you see in Romania, you see fiscal controls, a tax inspector comes to a company, yes. is going to look at the accounts and etc. Often this is a very labor-intensive process. You see horizontal monitoring into different countries. What does it mean? That the tax authority is actually concluding a protocol with the company, What is the systems and the procedures which you use? How you calculate your taxes? What is the education of the individuals? How do you check? What is your tax policy within a company? So instead of controlling the company, the tax authorities are also concluding these type of agreements, either with companies or with tax advisors to apply these principles. So those principles are significantly reducing the cost to control taxpayers. And it comes a bit of the principle, why would a good taxpayer pay for all this money to control a bad taxpayer? Shouldn't the industry regulate itself? From this horizontal monitoring, we see within the international tax context that the tax control framework is being implemented at more and more multinationals. That also means that a tax authority is not looking anymore at the books of the company, but is like a type of audit on the procedures which the company is applying.
But what are the differences between having a company, a Romanian company as a shareholder or a private individual?
Yeah. So if you would invest into the Netherlands and you would decide to open up a legal entity there, then you have the decision which you need to take. Am I going to own this company as a private individual, or am I going to have my Romanian company owning the shares into this Dutch company? First thing which you need to consider is the legal context here. If I am a private individual and a shareholder in a foreign company, what are the responsibilities which I have from that point of view? When as a private individual, you have limited, but you have responsibilities. So first you need to decide from a legal point of view, what am I going to do? If you sell the shares in the future and you own this company as private individual, you would pay capital gain tax on that capital gain. If that Dutch company will distribute dividends to you, you will pay 15% dividend withholding tax, which is the Dutch rate, which is higher than the Romanian 8%. So you would lose 7% of that. However, if you would use your Romanian company to do so, in Europe we have a parent subsidiary directive which says if there are capital gains, the right to tax the capital gain is allocated towards the Romanian company. The Romanian company that gain is tax exempt. If there is a dividend distribution from a Dutch company towards a Romanian company, then the withholding tax based upon that parent subsidiary directive is reduced to nil. So it is very advantageous to use your Romanian holding company or your Romanian company to set up your business abroad, and of course it is also limiting your risks.
Thank you so much.
Pleasure.